Okay, thanks, Hemant Bhai. Let me just quickly run through the mandatory disclaimer on behalf of the group and myself. We are not professionally qualified investment advisors, so this forum is just for sharing information, learning from each other. Any individual making decisions on this basis needs to do his or her own research and take full responsibility of the decisions. And also, we're recording this. The recording will be redistributed amongst the group members and more widely if people are interested. So just a very quick recap of some of the concepts I discussed in the first meeting. First and foremost, the building blocks of the charts are candlesticks, where each candlestick represents the price action in a time frame. Okay, a green candle has an open at the bottom, close at the top. This part is called the body of the candle. The wicks showing at the top and the bottom, they demonstrate the high point and the low point in that time frame. If there was no wicks, only body, that means that the open and the close were the lowest and the highest points. Vice versa for the bearish candle. The only difference is the open is at the top and the close at the bottom of the body. This is the basic building block of any chart, and whatever time frame you choose to make a chart, each candle represents that time frame. So if you're looking at hourly, candle represents price action within an hour. If you're looking at daily, each candle represents a day. Okay, so you have to remember that when you're looking at charts. I mentioned last time that price movements have a fractal nature, which means they tend to repeat in patterns in whatever time frame you look at. So from smaller to bigger time frame when you go, you will still find candlesticks and price patterns making waves of up and down and sideways and so on and so forth. When you look at the charts, it is always better to look multiple time frames because whilst you will see patterns, you will see completely different perspective from one time frame to the other. The third concept is that the price always moves in waves. They never move in straight lines for any length of time. So you have to be aware that if you miss a particular entry somewhere, or if you miss out on taking profits, you should not worry and chase the market. You know, the markets will give you opportunities for improved entry and exits. So it is better to wait out, especially if you are trading higher time frames. The last concept here is about tendency of price to come back to mean. Whether price is moving in a sideways direction in a channel of a support and resistance, or it is trending up or down, it always tends to come back to an average path. Goes up and then comes back to visit the mean, goes down and then goes up and down and up and down. You can always look at this and see patterns of price trying to come back to the average. A lot of people do trading based on just this fact. It's called swing trading, wherein they try to capture the swing highs and swing lows based on the average price. So these are some of the concepts which you will find constantly present in price charts. Moving on. So whilst price chart patterns, they have a tendency to repeat themselves, and therefore you can base your trades on some of these patterns. They are not guaranteed. Because it is not scientific. Why they tend to work is because there is a collective decision making behind formation of these patterns. Therefore, there is a data-based reason for them to work, but also because a lot of people follow them and they put their weight behind it, it creates more volumes in favor of those patterns, and therefore it creates better probability of working. But as I said, these are not guaranteed, so you have to be careful while doing that, and always manage your risk well, so that even if you go wrong, it doesn't damage your account. So that's the most important thing. Couple of concepts that I did not elaborate last time very well, I think, so I want to touch base again. In the charts, you'll always find price moving in certain channels. Whether it is a sideways channel depicted by horizontal lines of support and resistance, or upward trends and downward trends. When you drop these lines, they tend to continue to act as support and resistance. The reason behind that is that when you see a support line, that is the price is not able to fall below this, there are a lot of buyers who have either orders or are willing to place orders at this level, which is why when that happens, they outplay the sellers and the price goes up. Likewise, at the resistance point, there are more sellers And when they sell and when they outnumber the orders from buyers, price tends to go down. But one thing you have to remember, and it's quite an interesting concept, that every time a resistance line or a support line is hit, it consumes those willing buyers. Okay, so for example, let's say this is Tesla and I want to buy at this level, and so does Dheeraj buy, so does Jeet, and so on and so forth. Now, when I have bought my bid, I'm done, right? I don't have any more money, or I don't want to invest more money in this. So I as a buyer have been taken out here. Likewise, when it touches more and more times, it takes more and more buyers out of the equation. What it means is that even though a support line is a support line because there are willing buyers, every time it is hit, it reduces those number of buyers, which means the propensity of it being broken increases. Likewise for resistance, the more time it touches a resistance line, the chances of it being broken becomes higher and higher as it goes along. So very important to remember. So sometimes, people, when they see a very congested chart within two lines, support and resistance, they think that these are very strong support and resistance because there have been multiple hits to that line. In fact, the opposite is the true, which means the more the hits, the less chances of that holding on. So it's very important to remember. It's almost like the resistance is like a ceiling and you're hitting it from bottom. With every hit, it is becoming weaker, and there comes a point when it gets broken. For the next time around, it becomes a support. Okay, so this is also quite an important aspect. The reason behind it is that people who were kind of forcing it down, they have their stop losses just above the line somewhere. When it gets broken and when the stops are taken out, they become buyers. Resistance is broken, it becomes a support. It has been seen, and I have witnessed it myself in a lot of charts, that more hits resistance line takes, the better support it becomes. So the price tends to move like that, even if it is moving sideways. If it was moving in a trend line with higher highs, higher lows, or lower highs and lower lows, the theory of support and resistance still works. What you have to remember is that the more time it does in a channel, the chances of it breaking increases. If you want to join a trend, try and join in its infancy early in the stages. If the price has already done a lot of movement through a channel, and if you want to join late, then the chances of it breaking will be very high, and therefore your ability to get profits will be either limited or you might even get caught on the wrong side. We will examine some charts today in live, and I've got a dummy account on CMC. They're pretty decent in terms of charting tools, so I will use that. What I will do now is I will break to charts and see if we can find some good support and resistance areas, and also see patterns. So this is a chart of Tesla. I'm using daily chart. Every candle represents a day here, and it is 12 months worth of data. Now, if I change this to 1 hour, each candle represents an hour, but obviously because of the screen size, it has now reduced to 2 months. Let me go back to daily chart. So if I look at this part here, yeah, this is kind of a sideways movement within this channel. The lowest point and the highest point act as the support and resistance. When you've had a few hits to this and it breaks through, going forward, the price action has never come back here. So it is still to be tested, but it will act as a support going forward. If you were to play Tesla, let's say if this breaks down, then the next thing we will do is we should wait for it to hit next support lines so that we can become buyers there. Okay, we can try and draw some more lines here. There is another support line developing here. So that's the concept of support and resistance, right? I said, support resistance need not be in a straight line. They can be in form of trend lines as well. From here to here, price moving up, coming back down, up and down, and this is where it is broken. So this trend is no longer valid, after this. But I'm slightly worried about Tesla is because of 2-3 things. One, so it has started forming a downward trend where, so this is a swing high, lower high, swing low. Now, if this comes down and forms another low, which is lower than this one, then the definition of downward trend will be confirmed, right? So if this is broken, which is at 371, the condition of it forming a downward trend will be met. So after this point, we should be waiting for the next support lines to enter, because from, see, top was 491 and right now it seems like a significant fall. We should never be thinking like this because it will appear to be exaggerated. But the point of this analysis is that it is still not hit the next support mark, which is somewhere here. The next support is here, and then the big support here, which is the break point of the previous resistance. As value investors, we should be looking at those points rather than trying to jump in because we've seen a big red candle day and we think there is better value in buying at this price than there was at buying at this price. However, because it is in downtrend, the tendency of this price action to continue that way will be high. Therefore, you should play a patient waiting game to see if it reaches there. Unless at some point, even before reaching here, price breaks this new trend. I already hold this, and as an investor, I would like it to break this, right? So my emotions are in favor of adding more and the price going up, but I cannot negate the fact that it is currently starting to form downward trend. Therefore, I have to sit tight with my money, not do anything, and wait for the price action to hit next support line or indeed actually break this. Until those two things happen, I will not do anything. I will not add just because it looks better value than we had here. I hope you get the gist of what I'm trying to say here. Any questions on the support and resistance bit?
That triangle forming which you're showing, right? I mean, where it's from the upside, you draw it down to the support line.
Yeah.
Now, that one example, right? I mean,
yeah.
Now, is that like some sort of a support level? And if it breaks below that thing, then you basically can expect it to fall down further, right? I think.
Absolutely. So if you see here, follow the price closely. The swing went here, then up, then down here, up and below. So this area, there are a lot of buyers here who are resisting the pressure from sellers, right?
Yeah.
But they will, at some point, they will get outnumbered because they're already getting consumed. So some people are already buying at these levels. They do not have infinite supply of money. Do you see what I mean? So at some point, they will have got exhausted. And if the sellers continue because of the emotions or the current situation, they continue, these buyers will be gone and the price will penetrate through. When that happens, some of these buyers who are short-term traders, they'll have their stops because, not everyone plays a very long game. Some of these traders play a very short-term game. They will say, okay, I'm buying it here, but if this fellow breaks, then I'm not, keeping it. So they immediately sell. Their algorithms kick in and they start selling. As soon as the price breaks down, there are big candles down, right? So at such points, we should be very, very careful, because when we see long candles down, we immediately start shouting in our mind, oh, this seems like great value now because it's for sale. But the point of technical analysis is that how do you know that it is great value at this point? The only way to know technically is by looking at the charts, and the charts basically tell you that the next value band is here, not in between, right?
Yeah. And just in this case, I mean, if the price breaks above the top blue line, which is coming down, then does that indicate that it could?
If the price breaks above the trend line, that means the trend that was forming is no more valid. Okay. And second is, if it breaks this lower high, this bit, so it has to penetrate through this line, but also go above this line.
Above this one,
above this line, then we are back this major trend continuing upward.
Okay, right? Making higher highs basically. Okay.
Correct. So I think we should look at all those aspects. We have to understand what the buyers and sellers are trying to do, what these candles are telling us about their behavior.
Yeah.
And these things are valid for both, sideways support and resistance channels, as well as rising trends or declining trends as well. Because we are buy and hold kind of investors most of the time, we should be looking at rising channels only to take profits, and declining channels to actually start creating new positions. When an asset has been a declining channel for a long time and it breaks these kind of patterns, then it's a good point for us to start buying, because that's the start of a new trend. And if you join a trend, a rising trend in early stages, then you tend to make more money.
Just on the left side, I mean, when does the resistance become the support? Is it when the resistance is breached? Is that correct?
Correct. When a resistance which has been hit multiple times is breached, if it is breached with a force like it did here, if you see this price action from the bottom to here, then it is even better. Moving on, today I would like to just discuss two or three things. See, we are interested in understanding the continuation of a trend or the reversal of a trend. Continuation of a trend, because we want to, if we see a rising trend, question is whether we want to join it to get some profits. Like somebody asked today on the channel about Reddit, okay, whether there is more left in Reddit. No, nobody knows whether there's more left in Reddit or not. Just by looking at the chart, I saw that it had done a long-term rising trend. Therefore, my suggestion was either wait for the price action to touch the bottom of the channel, or just ignore it for now, because it has already done quite a bit and the chances of breaking are higher than chances of continuation. You can pick up some patterns for continuation at the early stages of a trend to join the trend and make some profits. Likewise, reversals are important when you already have a position and the price has been going in your favor. If a reversal happens, then that basically tells you to start taking some profits, because when you take profit, you create more money to buy back later. For that reason, reversal is also important. Reversal is also important if in a downward trend, you capture it and you can start a new position. So we will discuss some of these today. So first thing is a reversal pattern called double top. A double top is formed when a particular price has been in a rising trend for a long time. I've just drawn three. It could be 5, 7, 6, whatever, any number of swings. The longer the trend, the higher the propensity of it breaking down. Okay, just remember that as well. So if it has been in a sustained uptrend for a while, then at the top end, right edge of the price, it forms a structure like this. It has a higher low, higher high, another higher low, but the next one is not a higher high. It is either similar or maybe slightly lesser, okay, which will give you a double top, but slightly slanted.
Does it have to be lower than the previous top slightly, or is it should be the same?
It should not be higher.
It should not be higher. Okay.
It should not be higher, so it can be same or slightly lower, because
Okay.
if it is higher, then it is still within the definition of higher high, right?
Yeah, high, yeah.
Right. So if it is same or lesser, then the double top definition is valid. If it is slightly lesser, then it is even better. Okay. Lesser means that actually buyers are losing steam here, and the sellers are overpowering them already, right?
Yep.
Okay. Then when it breaks the channel, so it breaks this channel, but also breaks this point, the last lower high. The two things have to happen together for this to work. In the higher time frame, there might be another trend which it might go and join. Remember that reversion to mean I said, because this might be in a shorter time frame like hourly, but on a daily, it might be actually trying to join a bigger, longer term uptrend. But this particular is broken, and what you should do is, if you are already in a position, then at this point you should start thinking about taking your losses. Again, this will not fall like a rock. It will still do a little bit of, after falling, it might actually go back a little bit and then give you chance to get out at this level. A lot of institutional traders and people who use algorithms, the moment it is broken, they just sell. And that is why, see, when it is broken, it forms quite long candles. So that's the definition of double top. You should use it as an investor. You should use it to start thinking about taking profits, or at least not adding any more in the short term. I will come back to when you should add later. Say, for example, when it comes down, it will revisit this support area, and this support area, right? At some point in time, because it will form waves like this, right?
Okay.
So the key decision for us here is that if we are in position, okay, and we have actually made some profits here, we should start booking at least part profits, because it is going to come down and will give you opportunity to buy even better. I do this all the time. So if one of my things is in 20-25% profit, and I see this kind of a pattern, what I do is I take maybe half of it off the table and I leave half, because what if it continues? Then I should still keep making money. I take half off, then that money is in the bank. Then if my theory is correct and it comes down, I sold here and I can buy back somewhere at this level or at this level. Same quantities. I play with the same quantities. So it gives me that way, it gives me opportunity. Now, if this was inverted, if this was the other way around, coming from top left to the bottom right, meaning if it was the break of a downward trend through a double bottom, then the same thing will apply. Now, that is even better for us as value investors, because then we've got something reversing the trend at a very early stage. Okay, so as a buyer, I would like to jump at such opportunities. Obviously, I'll have to do other research as well. It has to be a good company, it has to have good volumes in the market, it shouldn't be easily manipulatable, and so on and so forth. So all of that I will still see. But if I see a pattern where after a longest downtrend, I find patterns of the trend being broken and a double bottom, okay, with a few other things, then I will straight away jump into it. Okay, I will start a position, new position. And if I was already holding while it was losing money, then that gives me confidence that now I'll make a recovery. But let's go to the next one now, which is similar to double top, but even better than double top. It's called head and shoulders. It has to be after a sustained trend, okay, in this case, rising trend. Then it has got a shoulder here, then a head, which is higher high, a low on par with this one, yeah, or even lesser. Again, a high, but not higher than this, on par with this thing, a right shoulder. So if you look at this, this is head, this is left shoulder, this is right shoulder. Okay, in reality, you will never get perfect pictures. You have to kind of see whether it is broadly forming those pictures. We will see some examples on real charts. So when this kind of a pattern forms, then you have to look at the break of the trend line. Okay, so this time you have to extend and see if this trend line is broken, and also the neckline as depicted by the lower of the two lower highs. So whichever is the lower high, that should be broken. It is breaking through the trend line and the lower of the lower highs. Okay, from the shoulder, head to shoulder, this one, then it is even better than the double top. Okay, oh, I forgot to change the title. So this is called head and shoulders, not double top. Head and shoulders is even better than double top, because here it is basically telling you that this was kind of a last bit attempt by the buyers to push it higher. The whole trend was tiring here, last bit push, another push, but they got outnumbers, and then it falls. Even better than the double top. As I said, for value investors like us, we should be looking at the converse of these. So rising trend, we should look at profit taking. But if we catch these things in converse order on the downtrends, and the companies are good and we believe in their kind of business model, then those are opportunities for us to buy at a very early stage of rising trend, and that gives us enormous profits. So let's see some examples of double tops and head and shoulders. I think I saw it in, so NVIDIA, if you focus on this part of the chart, right, where my circle is, yeah, a fairly good rising trend from this point. This resistance line was broken here, okay, and it continued on a merry way upward. But here it made a swing high, low, swing high, low, swing high here, right? Then low, and then another high, which is lower than this, okay, and then break of this line. So the moment it does that, it has broken the double top. The conditions are, after a prolonged rise above, it has made a high, another high, and then breaking the lower low. So this is an example of double top where this is broken, it came down quite heavily. These patterns you have to pick. They will never be perfect like a drawing, but you have to almost pick it and see whether it is meeting the conditions. There was a double bottom in recent charts. Hold on, I'm just searching. I think it was NU, if I'm not mistaken. So NU Holdings, this pattern here. Are you still with me? Yeah. So let me draw this here. From here, it was making low, lower high, lower low, lower high, lower low. So it was in a downtrend. And then if you see this pattern here, so let me get rid of this because this is confusing. So if you see this pattern here, down, up, up, and then down here a little bit. So a shoulder here, and head here. You see this? Right. Yeah. Sure. And it has just broken the neckline here. So the neckline was here. It has just broken this. Okay. So I am personally, and seeing a lot of value discussion on the channel, I am a buyer on this. So what I'm thinking is I've already started my position, but I'm also thinking if the price doesn't go straight away, doesn't matter. My position has started. I will look to add more here. These are the areas where giving me further support. Yeah. That one here. And obviously where it started was here. Yeah. So these three. It is a start of a new trend, and the new trend is also confirmed by this little line here. You can see, yeah. Yes. Yeah. Right. So unless it breaks the bottom here, I will not be bothered. Comes down, I will only add here. If it actually shoots up, then I will wait because it will keep making waves. I will try and add at every wave it makes till it reaches somewhere here when I might start taking some profits. And I did kind of mention this on the channel as well. So if you see it in a narrower time frame, the head position becomes even more clear, right?
Correct. Yeah.
Yeah.
Sorry, I
And
mean, I don't see the head. What exactly is the head over here?
let me
I
first.
can see the shoulder. I mean, like the shoulder for the two shoulders, but not exactly
Yeah.
the head.
Okay. So because this is inverted, right?
Is the head like the upside down?
Yes. Head is
Okay.
upside down, obviously, because it is inverted, right?
Okay.
This is the head.
That's okay. I mean, that's fine. I
Yeah,
mean,
it is
I got it now.
inverted.
Is it always with two shoulders? I mean, the left and the right, or is it like?
So either double. So if it was a double bottom, then also I would have taken it. I'll show
Okay.
you a double bottom as well.
There's double top on this one, right? That okay. I think it's either same. I mean, there's double top I can see over here.
This one.
Yeah.
No, it is definitely a double top. But you know why I will not take this trade is because if you look at the overall picture, it is not after a consistent uptrend. See
Okay.
my point?
Yeah.
If double top happens after a consistent uptrend, then it makes more sense. These pictures will appear anywhere in the chart.
Okay.
But they make sense only when they appear at the right position. So if this price action was going from here to here and this double top appeared here at the top, then it would be a beautiful pattern to follow.
Okay.
Right. So let's see if we can find others. There might be others. Yeah. Okay. So this was another one which I called, but it has kind of since gone out of steam a little bit. So you see this overall trend. This is Diageo, which I also hold.
Sorry, Jayadevji. What's the exact name of the pattern? I'll just quickly Google and post it in the chat so that you can use it. I'll search for that pattern
it's called double top, double bottom, or head and shoulders, reverse head and shoulders.
I have just posted something called inverse head and shoulder. Is that the one in the chat? There's an image.
Yes. See, that's a good one. Inverse head and shoulders. Yeah. It's like a reverse mountain peak as well.
Okay. I didn't actually know anything about it. I just basically searched for the pattern and posted. So
no, this is really good. This one is really good. It is more prominent than the example I showed. This is also from a real chart, clearly, right?
Yeah, but the shoulder may be a sharp shoulder or it might be a curve, right? I mean, both can be an option. I mean, possible. I mean, in this case, the one in the chart is having a sharp shoulder. But yeah, in your case, which you were showing, that had kind of a curve. You're speaking on mute.
Can you guys hear me now?
Yeah.
Sorry, I left the chat briefly because I pressed the wrong button. Yeah, so I think that was a very good example. And that's what we need to be able to see in the charts. They will never be perfect, but you need to be able to spot it and see if your conditions are matching, and then use that for your decision making, not in entirety, but with other things. So let me go back to the chart again. So I was talking about this particular thing. This is Diageo, right? See, this was in a continuous downtrend, right? Can you see this? Are you guys with me?
Yeah.
Okay.
Yes.
Yeah. So can you see this downtrend? It was a continuous downtrend.
Oh, yeah.
And then it formed this little pattern here. So this I'm talking about a few days before now. Right now the price is kind of not doing what I wanted it to do. But when the price action was here, you see this point. So it made a low. Then it went up, made another low, and then break this thing, right? So double bottom. So this bottom and that bottom and the neckline here. It broke this, and I started a position here. I think in a way I was a little impatient because in an ideal world I should have seen the break of this, according to my own definition, but I didn't. So as soon as it broke this, I started, and now I'm kind of not in a great position. It's neither here nor there, but I can see that the downtrend is tiring already, because if I see the points from here to here, they are not making any new lows. So I'm still comfortable with this position. Yeah. So a double bottom example, which didn't quite work out, but it might work out in the end.
Sure. And this black line which is there, right? I mean, what is that called? Is it the support line or?
I drew this line to show you where the neck was, of the double bottom. So swing down, then back up. So this swing high, that is where I drew the black line.
Okay.
Then when this was broken, that is when it was a confirmation for me to go long, meaning buy. But a more perfect scenario would have been when it had broken the channel and this as well. I think I was impatient. I have to be honest. A patient trader would look for more than 2 or 3 things. In this particular case, I just saw has been going down for a while, made a double bottom, broken. Let's start a small position. I think it was being a case of being impatient. Right? So this is a good example of taking a trade which is not working, but it is not failing either. I mean, I will not call it a failure unless it actually breaks this blow and goes further down. Okay, so I'm still holding tight onto this, and I'm hoping that one of these days it will actually make a big move upward, and then after that it will be clear of this trend line.
Yeah, I mean, I see it definitely work, but I mean,
Yeah.
it didn't break the previous high. I mean,
Yeah. So that's where I think as I said,
yeah,
one has to be patient to see what's happening. The reason for me to get in so early was, if I just take a even longer term picture here, it has been down trading for a long time. So I see this to be a good value, right? And that is why I thought, okay, let me start a small position. Even if it goes down, then I can do averaging down. So far, it's not terrible, but it has not worked yet. So it will become terrible if it goes below this black line, this red line, this one. If it goes below this, then it become a bad trade.
Can I ask one question here?
Yes, please. Yeah.
No, when we were looking at the pattern, how do you decide whether the pattern is within 1 day, 3 months, or 1 year? Because there could be, if you are looking at like the one which we were looking at, the DIG one. So it depending on what time duration you pick. So for example, in this one, it's showing a downward trend from here, from beginning to end, the blue line. But in between, there could be n number of other patterns depending on the grain or the amount or the duration, the pattern you are trying to draw.
Absolutely. So very, very, very good question, sir. And because of the fractal nature, if I reduce this, you will still see other patterns. You'll so this is hourly, right? No, this is daily. Let me put it to hourly. You will see different patterns emerging here, right? So for example, in hourly, I can see that a little bit of head and shoulders type or a double bottom type thing working here, right? So if you see downtrend, this downtrend here, swing high, made a low, made a shallower low, and then it broke this line here, right? You buy here, then you are in good profit already. So I mean, these patterns will be visible in any time frame. Why I choose daily is because when you are playing with shorter time frames, you are running more risk. Then you have to be trading more, because then your buys and sells will happen more frequently. Okay, so your transaction costs will go high, and you being caught out and the wrong side will also increase, because every once in a while you get caught on the wrong side. So if you're playing with shorter time frames, whilst these patterns will appear and they will work in those time frames, the chances are that cumulatively you might end up not making money or not making much or even losing for that reason, because of the frequency of trades, right? Transaction costs will be high and law of averages will catch up with you. The reason I'm suggesting daily or even higher is because then you see the pattern of the value of the asset, right? So rather than the reflection of day-to-day emotions of the trading community or people who are buying and selling, in the longer time frame chart, you see the real value, whether it is going up, sideways, or down. You see bigger volume of price action. For that reason, my personal method is, and my suggestion is, to always look at higher time frames. Do you see my point? But in this time frame, if we go even lower, let's say half hour. In half hour, this was even a better looking trade. Quite a long, steep down, and then it broke the neckline. And then, if you entered here, you are in good money, right? Like, let's say you entered here, you sold somewhere here, right? Then you would have made money. But the thing is, it's very easy for me to say this on an old chart, which is, I'm not at the right edge of the price chart. But the thing is that you are then trading, 3 times a day on different charts, and that to me is too much of trading, and it can play with your emotions, and your risk management can go out of the window. So you have to decide for yourself what kind of trading activity you want to do. But to answer your question, these patterns will be available in most time frames. It is just that the frequency will change. Does that answer your question?
Yeah, thank you.
Yeah. So some people, they create a completely separate account for that kind of activity. Low risk, small amounts, small money, more frequent trading. And you can experiment. And if it works, then you can kind of increase and scale up. But I think as a value investor, you should look at higher time frames. Yeah, that's my suggestion. Okay, so going back to my charts, have we covered everything? I wanted to cover a continuation pattern as well. It's called a flag or a pennant. so far we saw reversal patterns, two reversal patterns. One was double top, or inverse of that is double bottom, or head and shoulders, or inverted head and shoulders. So we saw that. Now look at something which is a continuation pattern. If you are already in a trade, okay, and this kind of thing appears, then that means that the price is likely to continue if you see a very good trend going in your direction. And if some of the continuation patterns form, then adding is not such a bad thing, because then you are multiplying your profits. But then you have to be very careful at the point when the trend tires. You should be able to take some profits. So let us look at these patterns. These are called either flags or pennants. They are very similar in nature. A flag is it's almost like a pole, which is depicted, which is made by a sharp move comprising of one or more candles. So very sharp move followed by a consolidation, which is typically in the opposite direction of the pole. So it is kind of slightly slanted downwards, but it is within a very narrow range. So how do you define narrow? I think it is in relation with the size of the pole. So with the size of the pole, it needs to look like a flag. Okay, just like a normal flag. Okay, so roughly, less than 1/4 of this overall. It could be parallel or it should be downward. Sometimes, rather than forming a pure flag, it forms like a pennant, in which the price action actually continues to narrow till it breaks in the direction of the earlier move further up. So this sideways and up. Okay. Now let me just find some examples of this.
But both are kind of bullish in that way, right? I mean,
so that example was bullish, but if it was other way around, that is also possible. Okay. So if the flag was forming on a down candle, then also it will be valid. Then the downtrend will also continue.
That means basically a reverse flag.
A reverse flag.
Reverse. Okay. Yeah.
A reverse flag or a reverse pennant.
Inverse.
Inverse. They will also work.
In terms of the pennant, I mean, that basically means the prices tend to going up, right? I mean.
Yeah.
Okay.
Yeah. So basically, it's a channel, a parallel channel of consolidation, whereas this one is increasingly become narrower, which means that the breakout will happen sooner in this case.
Yeah.
Okay. Because it's already narrowing. Both the buyers and sellers are pushing each other very quickly, and one of them is going to give up. Let's now look at some charts. I think you will also help me in finding these, please. Right. Okay. So can you look here? I mean, it's not a great example, but this one here. So a pole, right? So right up to here. So first move here, right? And then slightly down move parallel here. And then once it was broken, then further move here in continuation. This thing can be called a flag. Okay. Now, why I'm not saying it is ideal? Because it's not happening as part of a bigger move anyway. Okay.
And just the pole of the flag, will it be a bigger wick usually?
It can be a wick or a full candle. You have to look at it in entirety. Okay. So this is a very good example here. You see this price action where my cursor is at the moment. Yeah. This price action here. So 1, 2, 3, 4, 5. A pole consisting of 5 candles. Then just 1, 2. That's it. See here.
Yeah.
And it blasted through again and then continued. Made a small flag again and continued. Okay. So these are very powerful indicators for continuation, because if you see momentum in a direction, after a big momentum, if you see a flag forming, first flag, you can always take. Even if as a short-term trader, you can always take the first flag. Because what happens is that after a great move, consolidation happens, the rest of the sellers get shaken out and it invariably makes another move. See here, this one. So a pole and a little flag here. Yeah, that one worked. Incidentally, I'm only showing where it worked. In some cases, it may not work, but I think probability is quite high. What you have to look for is the pole has to be very good. So in this case, for example, it didn't work much. So the first one worked. The second one, the pole is bigger, and there was this thing here, right? So if I increase it, so this one here, right? So a pole and this one here, it worked, but not very high, right? So suppose you took a position here, right? Then for a very long period of time, you're not making any profits.
It also depends upon market sentiments as well. I mean, whether the FTSE is going up or the Nasdaq is going up or down, and that can drive those technicals. I mean, in an opposite direction. I mean, than what you think. Yeah,
absolutely. So I think you have to, as I said about everything else in these two sessions, you have to look at these things in combination with other fundamental things and other patterns, etc. as well. right? So never take just one thing for granted. Yeah. So Nvidia, I know it is actually bothering me a little bit because I'm invested here, and so if I go for shorter time frame, right, one day, it is actually forming a flag here. So from here to here, a pole. So invert flag, yeah. So a pole, and now it is consolidating, right? Now if it breaks this, then it will be heartbreaking, obviously, but because we are invested, some of us are definitely. I will wish that it doesn't break. I want to see it, somehow retracting back and, test this 142 again, where I intend to, start taking some profit.
The break is the red line you're talking about, or the purple?
The break is now the purple line because it has already made those lows, right?
Okay.
So if I look at the hourly, so those lows have already been made, and right now the price action is above those lows. So unless it breaks those lows, I'm not worried. Because I'm in this position, I still believe in the company. And I still believe that despite DeepSeek's market changing thing, the business is not so weak that it can be unsettled by just one development, although it is quite market shaking. So I am actually hoping that the company will recover from this shock. Even if it breaks, I don't think I'll try to book my losses. So my entry was at 115 something. Okay. So I'm just slightly in the green here at the moment. If it breaks down, I will still hold it, but it's not going to be a good sign if it breaks this, to be honest, looking at from the perspective of charts. So if you look at the dailies, it has made high and then a lower high, a lower low, another lower low. You see this, and that is bothering me a little bit. And if it breaks,
is that the next support after this? We're going to be like somewhere around 80.
So the next support is here, this one here, 107 something here.
107, okay.
Between 106.5 to 107. Yeah, this area here.
Okay.
I mean, this is life in trading, right? You get some right, you get some wrong. As long as you can create a method which creates probabilities in your favor, in the longer run, you will win, right?
Yeah.
Going back to that question about shorter time frames, I would recommend caution there. You can use it to experiment in a smaller account, right, where your risk is limited. Just watch your risk like a hawk if you are trading short term. So here, I think I can afford to go down further a little bit, and then I would be a willing buyer at this levels, at this levels to kind of. I will then do average down. But in this time, this will happen over 3 to 4 weeks. Okay, in these 3-4 weeks, if guys like Dheeraj, they tell us, fundamentally the market has changed, and now actually Nvidia is in great problem, then we might have to start booking losses here. Who knows? We'll have to wait and watch. But I think right now the technical chart is looking not great.
Don't worry, we have Jeet Bhai and Sandeep Bhai has joined as well, I think, into Nvidia.
Yeah, they have. Yeah. So which is why when I posted message earlier today, I said exercise caution on this for now, at least from a swing trade perspective. Also, Tesla was another thing where Jeet Bhai was making a lot of swing trades. So let's look at Tesla as well. See, Tesla is also unfortunately forming a similar thing. High, swing low, lower high, lower low, lower high. If I disregard this, then lower high. And then, so this pattern here, if it breaks the previous low, then that's also not great news for Tesla, which means the next support is here. Which is why I said, if you're in last few weeks, you've done some swing trades, that's fine. But now this thing is getting narrower. The price action is getting in a very narrow band. Personally, I would also like it to break up because I hold a little bit of Tesla. So if I look at it in weekly time frame, actually a weekly doesn't look that bad because, I could say that this is a big swing up and then it's consolidation. And once this consolidation is broken, this is like a pennant, right? A pole and a pennant. If this breaks up, then, we are all good. But that's in a very long time frame, right? Before that, we'll have to deal with the emotions of what happens between now and next few weeks.
I think it's already around 400 now. Current aftermarket price after the results.
Oh, is it?
Is 400. Yeah, the price has gone up 3% for Tesla.
Oh, brilliant! So has it broken this high here? It is 424. Not yet.
Not that high. It's around 400 now.
I would like this line to be broken. At least break this, this hourly swing high, if not the daily swing high, which is here. Okay.
What platforms do you recommend for this plotting these charts?
So this one is I just created a dummy account on CMC today. Yeah, they've given me dummy money as well, 10,000. But my suggestion is try and learn the charting solution that your platform provides. because that's where you're trading, and whatever they provide, you have to deal with that. See, there is another thing which I wanted to show you. Have you heard of Fibonacci?
Yeah, heard of it,
Yeah.
but never understood what it means.
Yeah, so Fibonacci is it's basically a mathematical pattern. You can Google it.
1:1.6, which is the golden ratio in nature.
Yeah.
1.6 times.
I mean, there is a mathematical formula for it, how the Fibonacci numbers move. So based on that, and because it happens in nature, some people kind of postulated that even the prices will move in Fibonacci. And when you look at some of the moves, it kind of more or less follows that pattern. So I've drawn Fibonacci from bottom of this to the top of this particular move, one move here. Okay. And the lines here are at 61%, 50%, 38%, 23%. So you see that most of the support lines that I drew, they happen to be in those areas. Can you see this? I mean, this is as if by magic. So price naturally tries to follow Fibonacci patterns. Okay. So now this is past, right? So suppose you were to see where the price might go in future, you can actually draw up Fibonacci extensions, which is another tool here available in most of the platforms, and try and see where you want to take profits, where you want to book some profits, and if it is going down, where you want to kind of add more. So this could be a very handy tool as well. And if it aligns with your visible support and resistance points, like it does in this case, look at the 38.2 is dot on the line that I drew here. Okay, you look at 50% is not too far away from where I drew it. Likewise for 68%. So this could be another tool which you can use to decide where to take profits or to add to your position alongside with other things.
So what does this percentage mean exactly?
Yeah, sorry, Jadavji, I actually didn't understand. I think the mouse cursor was moving so fast we couldn't even see what you're trying to say here. Sorry, I haven't understood it.
Okay, all right. So I think first of all, let me explain what Fibonacci sequence is. Okay, and then I'll come back to chart. Okay. Fibonacci numbers in a nutshell, you start with 0, then the first number 1, then you add these two. So 1 and 0 is 1. So next number is 1. Then you add that number with the previous one. So 1 and 1, 2. Then you add that number with the previous one. 2 plus 1, 3. 3 plus 2, 5. 5 plus 3, 8. 8, 5, 13, 21, 34. And like that it continues. This sequence was found by an Italian mathematician. And what he found was that the ratio of any number to the next is a fixed number. So that's the beauty of this sequence. Most things in life, in nature, they happen to follow these Fibonacci numbers. Okay, so this is another thing like fractals, where price also seems to follow this. Coming back to the charts, most of the chart platforms have done is they have given you a tool called Fibonacci and Fibonacci extension. Okay, so what this Fibonacci tool does is in any chart, when you pick up a low point of the chart and the high point of the chart and connect the two, it creates these points for you. So 0 and 100 are the two endpoints. Then it creates 1, 2, 3, 4 extra lines for you, which are basically a representation of the ratios of the Fibonacci numbers. Okay, so forget the theory behind it, but the point here is that whenever you connect a bottom of a price pattern to the top of the price pattern, it gives you these lines. So top is 0 or the bottom is 0 and the top is 100% or vice versa. And then it gives you 23.6%, 38.2, 50 and 60.8%. So this line 50 represents the 50% of the total move. Okay. So if price moved from 1 to 100, this line will be at 50. If the price moved from 1 to 100, this line will be at 23.8 and so on and so forth. I drew it reverse. So that is why it is from 0 is at the top and 100 here. Okay. So how the price pattern tends to follow is now, even in this example is quite clearly visible here. When you draw such things, it tends to give you the support and resistance points in the price pattern. Okay. So along with other patterns and other indicators, you can use it for either profit taking or adding to your position. That's what it is like. It is just a tool. It's a mathematical tool, right? And there are two of these available. One is the Fibonacci and one is the Fibonacci extension, which gives you for future. Okay. So let me look at another chart and see if Fibonacci is working there as well. Okay. So
by the way, just if anybody's holding Meta, it's up another 4-5%. Sandeep, you'll be happy.
Yeah. We'll close it soon. Okay. So, let me join this bottom to this top. Okay. So Fibonacci from this point to the top of this here. Now, if you see where these lines are, you will also see major support or resistance areas. See resistance here. See this one here. This one here. Can you see how big a resistance this was? This lies at the 50%. So when the price moves in here, price actually prints new candles here. You could use these levels to your benefit. That is the point of Fibonacci, because it's been drawn for a long period of time, touching the bottom to this top, this move. So when you go into the future, you will see these levels and you can use them to either see this aligning with the buying point that I said. We could add here, we could add here, we could add here. So if the price actually breaks down, then these are the points where you might want to add to your positions, right? So that's how Fibonacci can also help you along with other things. Shall I repeat this if it is not clear?
No, I think I got that. I don't know about the others. I mean,
I think so. We are good. Yeah. If you could just
Yeah, that's
quickly
fine.
show us
Yeah.
the extension as well, please.
See, I want to show you that, if I move from here to here, what the future, if it was continuing the trend, where the future profit taking points will be. So what I've done is, so from starting from this point to this point, it's in a trend. Okay. So assuming I was here on Monday, the 24th December, and I have already seen this making a trend up. Yeah. If I drew this extension, then it will tell me in future where it is likely to pause, which could be my profit taking. It is not visible here because it has gone up the chart. Let me show here. Okay, so
Yeah.
so this is the extension where if it continues, it is likely to pause where I can take profit. So my next profit area will be somewhere like 95. No one has seen the price action, but this is telling me that the 23.6% will be here. So if the price indeed moves up, breaking this thing, the next pause might happen here. So if I want to take some profits, that will be my point, and then wait for a swing back to add the same quantity so that I've made that money, or reduce the risk, whichever way you want to look at it. So that's how you use the extensions, just only slightly different from drawing up the Fibonacci for the past. So this is more for continuing the trend and then either adding to position or taking profits.
Gotcha. Thank you.
So that's all. So I think we will stop here today. Yeah, it's been a fairly long session again, but I think we've seen enough charts today and tried to find some of these patterns in real charts, albeit not as perfect as on a drawing, but they do make sense and they give you higher probabilities of making a successful trade. So but again, as I said in the beginning, use them with other things, but most importantly, the fundamentals have to be well researched and should be in favor. So with that, we'll stop here. I think I'm sure there are residual questions, and there is a lot more as far as this technical thing is concerned. There is huge amount of work people have done, and you can make it as complex as you like. But what I have come to learn is that there are about maybe 10 things which are enough to give you a good indication. If you use more, then you will get into a situation of analysis paralysis, and it won't help. Okay. So going back to my CMC chart. So if you look at CMC alone, the amount of tools it provides is just amazing. There are quite a few things which people calculate and plot on charts, and they tend to work. This relative strength index, for example, is a good indicator of when a share is either oversold or overbought. But that's for another day. Most of the platforms provide these tools. My suggestion is this: stick with your platform. You don't have to go searching. On that platform, try to find out what they provide and just use them for now. Okay. If they are totally deficient, if they don't provide the basics, that you can't draw lines, you can't put support and resistance channels, you don't have some of the basic indicators like the averages and RSIs and so on and so forth, then maybe you should start looking for other platforms. But for now, my suggestion is just research as to what they provide, because for all you know, they have sufficient number of tools already on your chart. And if you tell me which platform you use, I can do that research for you, and maybe we can have a one-on-one session. I can walk you through few of the tools that you can put to use. Okay. Don't go searching for it, because there is so much in the market that it will cloud your mind. Where I have come to is I have come a full circle, and I've said, less is more. Price is the best indicator of what's happening in the market.
So I think, combining the technical with fundamental sometimes really helps. Especially when you want to do DCA, right?
Yeah.
You are fundamentally, I mean, you've done all the fundamental research.
Yeah.
But the stock is still in either in sideways movement or it is falling, right?
Yeah.
So it could be falling for a lot of other reasons, right? I mean, as you said, I mean, there are people who are actually selling or people would want to wait for some time to enter, so on and so forth. So that's where you actually want to, and you want to figure out, is it the right time for me to do a substantial amount of DCA, or should I still continue, say, probably in a systematic approach, right? Just to keep averaging.
Yeah.
So that's where you need to figure out. So I think that's where it really helps. And sometimes, I mean, if you're following some stocks for a long period of time, I know there are charts, but you also build an intuition on that. I mean, oh, this is a lower price point,
Yes.
right? I mean, you don't even need to look at the chart. I mean, you can just straight away go do a deep dive, and 9 out of 10 times you actually come out well.
Yeah, very good point as well. I think so. I think knowing your stock is very important as well, because each stock has a personality of its own, right? Because of the fundamental reasons, nature of business, the market it operates, and so on and so forth, right? And the more you know about the stock, the more you know about its nuances. And when you couple that behavior with the chart, then you know when to take action. I think all of this that we are doing is trying to help us make the right action at the right time. I think what we are trying to do here is trying to take the impulse out of the equation. So to your point, I think it is very important to know your stock, which is why the less number of stocks you deal in is better. It is because if you are in say 25 stocks, then knowing all of them intimately is a bigger task than if you are only in 10, right? But a very good point, Narenji.
Cool. Thank you, Jadavji. It's really useful.
All right. So any more last questions before we close?
Thank you so much.
Thank you.
Many thanks.
Thank you,
Thank you,
Bharatji.
Jadavji.
Yeah.
Thank you.
Jaydev.
All right.
Thanks
So
a lot, Jaydev. You have been
Thank you.
so helpful and so kind, including, I mean, like offering everyone to do one-to-one as well. So really, really appreciate, I mean, your kind help. So thanks a lot.
See, I learn in the process, right? So I think it works both ways.
Thank you, Jadavji.
So kind of you. Thanks a lot.
Thank you.
Cheers then.
Bye.
Sure.
Bye.
Thank you so much.
Bye.
Thanks,
Bye.
everyone.
Bye. Take care. Bye.